Good morning, Story Trading VIPs. There is a lot going on today. Lots and lots of news, lots of catalysts, lots of potential opportunities to make money. Wow, where do we even begin? I have to begin with the schedule. Okay, it's 9 a.m. now. Today at 10:30 a.m., we have our first weekly show with Chris Tuttle called Tuttle Trades. Okay, that's trade ideas from fundamental investor Chris Tuttle, who looks at things story trading style. We'll be looking at catalysts and technicals to potentially time a couple trades. So that's going to be at 10:30 today. Then today at 4:30 p.m. is going to be the CEO of RELL, RELL. We'll cover that a little bit more later in the show when we have another CEO interview we'll talk about in a bit. But wow, let's start with, we had Netflix earnings yesterday. We have Tesla earnings today. Let's just start with regional banks here. Wall and MCB, these are two regional banks that they reported their earnings last night. In case of Wall, it was last night. I think MCB, I'm not sure if that was this morning or last night. But anyway, you can see they came in good with good news on their deposits, and the stocks are surging. These regional banks are, and you can see that in the regional bank index and the and in this other ETF here, which is 3 times regional banks, right? KRE and DPST. And you can see the impact that's having on other regional banks that haven't reported yet: Zion, Pacific West, and First Republic, right? One thing that's interesting I want to point out is out of all of these regional banks, actually, let me just check PACW. PACW, the low is $5, so it's double off the low. Zion, the low is 22, so it's about 50% off the low. FRC, out of all these regional banks, I just want to point out FRC, the 52-week low is 1150, and it's only 1293. So, question: is there an opportunity here? Is there like a late reaction with FRC kind of bouncing back from this regional banking crisis? That's a potential opportunity. Or is this drop warranted? Is the fact that it hasn't rebounded something that's warranted for FRC? Maybe. And what would explain that would be dilution. I don't know to what extent did they have to get diluted by the big banks that were backing them up, JP Morgan, etc. Remember, there was a big effort there to keep those keep the company stable. So I don't know, opportunity. Okay. So those of you who want to do some research on FRC, there might be an opportunity here today. All right, that's all we're covering here on the macro. QQQ and SPY down a bit, but I don't know of any particular catalyst, big headlines that's causing that. It looks like it's just a little bit of a correction. We're still above the key moving averages. Okay, let's get into these specific stocks. A lot going on. All right, we had Netflix earnings yesterday, which were, I would say, pretty much in line. All right, I think the initial headline looked like a miss. Or one, I think, was mixed. I think one of them was a slight miss. I think it was the EPS missed a little bit, but the revenue beat a little bit. But then the Q2 guidance was pretty much in line. They said some stuff is going to be pushed to Q3 rather than Q2 with their pricing changes and stuff like that. Overall, to me, it seemed like a decent kind of inline report, but so nothing here to get excited about or shocked about, in my opinion. And you can see that in the price of the stock is relatively stable, just down 2%. Tesla has earnings tonight, but they had some bad news out this morning. I'm starting to worry about it. I don't play these big cap earnings, by the way. But I am worried about Tesla. Look, technicals is not in a great spot. And then this morning, they dropped their prices again on most of their models. And now most of their models are now 25% cheaper than they were at the beginning of the year after 3 price cuts in 4 months. All right. This is starting to get concerning. Initially, when they had the first price cut in China, that's when the stock went all the way down to about $100, $105. And that's when I bought, because the research that I had done and that I shared with you guys was that the price cuts would help Tesla gain market share. And although the profit margins may be lower in the short term, by gaining that market share, the reason it's good for Tesla is that they can then turn around and sell full self-drive for $10,000 or monthly fee at close to 100% margin. And that was a very strong thesis that, hey, Tesla is one of the only brands here that can cut their prices so much and have this benefit later on. But now you're talking about 3 price cuts in 4 months. Now you have to really start worrying about demand. I mean, are they really even going to pick up market share? Is the consumer even out there buying any EVs at any price right now? Is the economy so bad that that maybe that's what's going on? So I think there's plenty of concern here with Tesla down 3%. And I'm not going to play this from a trading perspective. I do have some IRA shares. I have to review what my allocation is, but I definitely think there's a downside potential here, and not a good look decreasing prices yet again the morning of earnings. So that's Tesla and Netflix. We talked about RELL CEO at 4:30. You can see the stock has been decimated since earnings. So this is a great time to catch up with the CEO. And Sanjay will be helping us with the interview today at 4:30. Tune in for that. And whoever tunes in for that is going to get a big edge in understanding why the stock has been down since that earnings report, which on the face of it looked like a beat. So we're going to learn about that, and we'll have an edge in terms of what to do next. So if you want to have that edge, tune in today at 4:30 for the CEO interview with RELL. Speaking of CEO interviews, next Wednesday, this has just been confirmed. I'll have to put it in the app later today. Next Wednesday, CEO, and I think we'll have both Rick Anderson and Erez, CEO of DRIO Health. This stock has just been decimated, hit a new 52-week low yesterday. There's been a lot of news since we last spoke to them. So we'll talk to them about a lot of different topics, and also talk to them about the future and what they can do to potentially stabilize the stock price over here. That's going to be next Wednesday at 4:30 p.m. All right. Microsoft trade has not worked out for me yet. I'm surprised, right? It looked like I was right 2 days in a row with these big gap ups. And I'm like, hey, this is heading to 295, right? On the New York Times report that Samsung is considering switching to Bing. And then there was a report yesterday about an analyst saying that, hey, Apple might consider switching to Bing, or at least they can have negotiating power now in their negotiations with Google. So kind of surprised this hasn't taken off. The openings of both day reflected the sentiment I had over there. So perhaps this is still in play. I mean, it hasn't really broken support here at 284 in the 5-day chart. It's still above the 20 DMA. So perhaps it's just going to take a little time to recoil up here and send it to 295, but definitely been a little bit of a disappointment here. Microsoft, my other play, I'll talk about gold in just a second. The other play was LAZR, Luminar Technologies, which has worked out. These were the two big picks I had yesterday and for the Wolf Financial Spaces Trade of the Week. And looks like a short squeeze potentially forming on LAZR. I'll come back to that in just a second. But first, I got to cover gold and CJJD. Gold below the 20 DMA. I've been actually reducing gold in the last few days because of weakness on the technicals. And I was kind of anticipating this break below the 20 DMA because as we were approaching the 20 DMA, useful that caused gold to go up. News stories about the USD, news stories about regional banking crisis. Like, I just didn't feel that news flow was continuing. And I'm like, I don't know if it's going to hold the 20 DMA. So I did reduce some yesterday. And in fact, I rotated some of that gold. I still have a big position of gold, but I sold about 20%. And I put that into more XXII. So we'll get to that in just a second. Man, just so much to talk about. Where do I go next? All right. So we'll get to LAZR and XXII, CSSE, LLAP, and HIMS because they're all part of one group of stocks, which I think could potentially short squeeze. But before we do that, we got a stock here. So much to talk about. CJJD. All right. This is a Chinese stock. I generally don't invest or trade Chinese stocks except for Alibaba once in a while. But this is very interesting news on many fronts. Let's just talk about the price action. Forget about opportunity. Let's just look at what happened, okay? CJJD here was at 475. They came out yesterday and said, hey, we're going to do an offering of, let's see, here we go, of 2.2 million shares and 4.5 million warrants to purchase 4.5 million, okay? And the outstanding shares are 18 million. So look what the market did. Took it from 475 all the way to 60 cents in a day. I mean, that's crazy. All right. That speaks to this phase of the market we're still in of either credit crunch phase. This was all sparked by the regional banking crisis, or perception of credit crunch phase, or anticipation, speculation that we can get into a credit crunch phase in the coming year. And this has dictated the price action in so many risk assets, whether they're micro caps or mid caps, any stock that needs money, any growth stock, any stock that, again, might need to do an offering. And here's the evidence. Oh, you need to do an offering? Well, guess what? The terms are going to be terrible. right? This is a bad environment to raise money. We're going to punish your stock. You want to sell those shares, you got to sell it for pennies. You want to sell those warrants, it's got to be for pennies. No one's going to offer you money in this environment. That's what the market's telling you here. And this is, again, additional evidence that that's what the theme is, right? So if you're looking at any other stock in your portfolio or on your watch list, you can think about that in both what are the opportunities there and what are the dangers there, right? Do you have a company that might need to raise money? Well, you might want to get out of Dodge. Or has the company been able to, or do you think they'll be able to raise money on good terms? Well, that's going to be a huge positive catalyst, because what's going on is a lot of these companies that, there's fear of dilution, they're being priced as if there's going to be toxic financing coming, really bad terms with warrants, et cetera, et cetera. And again, this price action proves that. And now that it's been reversed, right? Now there's two ways, and I don't know the answer without deeper. There's two paths from here, and I don't know the answer without deeper research. I'm leaning a little bit on Chris Tuttle, who's going to be joining us at 10:30 a.m. There's two paths. One path is, the offering is canceled. You should go back to $4.50, right? And you're sitting here at $1. I'm like, wow, that's a huge opportunity potentially today. The other path is, hey, they still need to raise money. And maybe it's not going to be today. Maybe it'll be next week. Maybe it'll be in 2 weeks from now, right? I don't know the answer to that, but Chris Tuttle quickly looked at their financials, and he thinks they actually don't need to raise money. If that's true, then potentially this stock can go back to $4 in rather rapid fashion. I'm somewhere in between. I think they wouldn't have, in the first place, put this offering out there with 4.5 million warrants unless they needed it to some extent, okay? Because that's a little bit of a desperation move when you have to sell and offer warrants. So maybe the truth lies somewhere in the middle. Maybe they wanted that money for some sort of acquisition. Maybe they didn't realize. Maybe they just didn't realize how bad the credit environment was. And then when they saw how the stock price was getting punished, they're like, okay, yeah, it's nice to have money, but it would have been nice to have it at $4, not at 70 cents, right? So maybe they just nix it and wait for the stock to get back to $3, $4 and try to get a better deal. I don't know the answers to all of that, but risk reward, I think, given the fact that this was $4 yesterday, I did step in at $1.17, added more, a little bit at $1.30 when our friend Chris Tuttle told us that he thinks they actually don't need the money. So we'll have to see where that goes. There is some support resistance level right here. You see where you had the initial surge down and then it stabilized in the 130s, right? That was my initial target when I got in at 117, and it's there. So that's the easy money. That's the safe money. Get out now, right? If you think there's too much risk after this. The question is, do we gain back some of this big knife down from $4 to about the 130s? And we'll have to see. I think I'm willing to see how it opens. I think I'm going to wait for 9:30 a.m. and play it out for a few minutes and see what happens. And even my 130 shares on the profit now, so I might sell half right after I get off this show. Okay, so now speaking of Chris Tuttle, before I get to these today at 10:30 a.m., we're going to have the first weekly episode of Tuttle Trades, and I love Chris because Chris is a fundamental-oriented investor who also appreciates the story trading style of investing, which is basically we try to time trades, right? A pure fundamental investor will tell, no, that's a no, you can't time the market. But we believe that's wrong. We think you can time the market by looking at catalysts, sentiment, and technicals, as well as the fundamentals. So Chris is going to join us with 2 trade ideas. And I don't know the details of it. We're going to banter with him about them, but the 2 ideas are going to be Mobileye and Quipt. Okay, that's all I'll say about it. We're familiar with both of these. We talked about Mobileye before with Chris. We've talked about Quipt before with Aaron. Warwick. So we'll get 10:30 a.m. Tune in, see what the thesis is on Quipt and Mobileye. All right, now going back up. 5 possible short squeeze plays. And the top one I want to focus on is XXII. Because XXII actually became yesterday throughout the day my top focus for the day. And I was buying a lot of shares yesterday. I was even buying stock options. Yesterday morning, there was news at 7 a.m., which is not showing up, and it's still not showing up on the TD newsfeed. It did show up on the StoryTrading app newsfeed. In fact, let's see. Let's open the StoryTrading app. So if you, here it is. Here, got to go from here. This is the watch list. Okay. Unfortunately, you can't order it yet. Reorder your items on here. So I got to scroll down. All right. So if you go to XXII and you hit the data mine, which is really the newsfeed items, you're going to see the news right here at the top. There it is. 22nd Century Group launches new private label brand with top U.S. Store chains. And I did go ahead. I hit that plus. I added that as a nugget for folks here to talk about, to rate it, to comment on. Now, that news to me was felt good. Okay, it felt good on the backs of lots of other news in terms of distribution deals coming into play for VLN, in terms of the possibility of them signing McLean and 7-Eleven in the very near future. That's the context. But then you have, hey, they're selling this Pinnacle brand of cigarettes to this Murphy's chain. That's what that press release was. And what I liked about it was that it's immediate revenue. It's already recognizing. He said it's already in stores, and we're already selling these Pinnacle branded cigarettes to Murphy's stores. And not only that, but they're looking to put VLN into their stores as well. What I liked about it is additional revenue in Q2 right now. Now, I don't know, is that profitable? I would hope and assume it is. And that's part of my enthusiasm for the stock, is maybe they're going out of the box saying, all right, we're not just focusing on VLN. We know, like, a lot of people for ESG reasons or whatnot, they're interested in VLN, but money is important and we need money to get the other side. We're willing to sell some cigarettes that are not VLN cigarettes in order to maybe avoid a financing, and maybe to avoid tapping into the ATM, right? And that's what got me a little bit excited. I've been in touch with Mish, the CEO, to schedule a call with him, and I'll be talking with him soon. And also, I'm aiming to be the first entity to interview him after the 7-Eleven news comes out. All right. So we have those direct lines of communications going on. So I don't know the answer yet if this deal with Pinnacle and the Murphy stores are going to be immediately profitable or not, as we watch CJJD up 113%. Okay. But that just gave me a good feeling that maybe management is pulling some levers that will allow them to avoid dilution. So now check this out. XXII is at a key level. It's at the 20 DMA. It's in fact gapping over the 20 DMA this morning in pre-market. Man, there's so much to talk about. I don't know what I'm going to finish today. All right. So it's gapping over the 20 DMA, and there's 18 days to cover. Look at this. 9.45% of the float is short. That's, I think, 20 million shares. 20 million shares. Average daily volume is like a million, a little over a million. 18 days to cover, folks. Look how important the 20 DMA is. It's the blue line. Okay. Now, if I remove the red and purple line, it'll be easier to see. The red and pink line. Is that pink or purple? I'm not so sure. But anyway, if you remove those lines, it'll be clearer to see the interaction this stock has with the blue line, and it's very adherent to it. At least it has been since about November. There was a little chop up and down above that line in October, but since November, the 20 DMA has been consistently resistance, and if and when it broke resistance, it flew 35% in a few days. Then it was support, and then when it broke support, it stayed below support for many months while it kept acting as resistance. So that's a big clue to me that if you break above the 20 DMA, which we're doing this morning, you can make a quick move to the 50 DMA, or I would say more like 80 cents. There's resistance before the 50 DMA right here at the bottom of these candles, about 82 cents. So I'm really, really bullish on this. And one of the things I saw, just an idea, a gambling idea, calls, there was someone selling a lot of options at 5 cents, which indicates that it might not be like the market value of, it might not be how the MMs would have priced this, because the April and May were also selling for 5 cents. And there was recently some activity in the April and May. Look at this, 1,400 open interest for May, 122. And even yesterday, people were buying the April and May, but then you had this guy selling 5,000 contracts at 5 cents on the July $1. And I said, that might be a mispriced kind of opportunity here, and something that you could sell when the 7-Eleven news comes out, right? When that's at. So I'm not going to hold this till July 21st. Oh, who knows? The stock could be $3 there, it could be 50 cents, right? But my plan is to simply sell those on the day when 7-Eleven is announced. I do anticipate the stock at some point or another will be up 30-40% on the day, or at least in pre-market. Might be someone to sell the open after that news comes out. So that's a gambling idea for you on XXII. But why do I mention this together with LAZR? Because these are both potential short squeeze plays. LAZR has about, I think it's about 3 days to cover, but a massive 28.5% of the float is short. It's only about 3 days to cover because it's very high volume daily on LAZR. But this, like XXII, at a key level, the 20 DMA, MACD flipping. If you break that 20 DMA, I think your next resistance here is about $7.25. A triple resistance, which is also a magnet, triple magnet. 50 DMA, 200 DMA, and the top of this candle, 724 in that gap. So, but it's got to close above the 20 DMA. Didn't quite do it yet. Okay, so watch that for the potential of a short squeeze forming if we close above the 20 DMA. Another one, very similar situation with about 12 days to cover, I believe, is CSSE. Now, CSSE has had many catalysts recently. This gap down was because they did an offering. But after that offering, what did they do? Insiders bought a pretty significant amount of shares from my recollection. Insiders bought. Then they've had a nice news flow over the last few days about just progress in the business and growth in the business. And now it's above the 20 DMA. But another thing interesting, yesterday, Chicken Soup to this all adds Redbox kiosks and more Dollar General stores. Guess what? That's sell DVD rentals, right? DVD rentals going into another 1,500 stores to total 5,000 stores by the end of the next year. Guess what happened on the same exact day? That was in the morning. In the afternoon, Netflix, with their earnings, they said they are discontinuing their DVD rental business. Okay? I thought it was discontinued a long time ago. Apparently not. So anyway, the DVD kiosk business seems to be doing well, making money for them. And now on top of that, Netflix is sending its DVD by mail business to the Blockbuster graveyard. And that's going to happen September 29th will be the last envelope they send out. And that's still a $150 million annual business. So one could say, hey, Netflix is getting rid of it. Why would that be good? It's obviously a bad business. Oh, look at the market caps. That's what I say, right? For Netflix, which is a $150 billion market cap company, $150 million business is nothing to them, not worth their time. But for CSSE, which has a market cap of 62 million, then this $150 million business, and it's not the same business. That was DVD by mail. This is DVD kiosk, but you can guess that perhaps some of the people who still want to do DVD by mail will now be getting some of those DVDs at the Redbox kiosk, which goes to CSSE. So it's a little bit of added fuel. This by itself wouldn't mean anything to me, but story trading style, 1 + 1 is equal to 3, right? This is where you get the stack catalysts, you get sentiment and catalysts and technicals and fundamentals, put it all together, and this might be the added extra push, right? Improving sentiment today acutely to be able to push over this 20 DMA and perhaps cause a move towards $3 on CSSE. All right. And then we have a so much to cover. 2 more short squeeze plays possibilities. LAP, I don't like as much because we don't have an immediate catalyst. We don't have an immediate catalyst, but we do have awesome technical pattern forming. We like the fundamentals, right? Still has that potential tailwind of that multi-billion-dollar deal with Rivada, which we're not going to get certainty on until the first week of July or maybe the last week of June. But that's a backdrop in which you say, hey, it has good fundamentals or good sentiment towards good fundamentals. If that Rivada deal comes through, you get this W pattern forming. You see that W bottom here, and they're breaking the 50 DMA. And guess what? This also has like an insane amount of days to cover. I forgot exactly how many days it was, but let's try to do a quick calculation in my head here. You look probably about 10 days to cover on this. Okay. So that's 1, 2, 3, 4 stocks. All right. That have short squeeze capability in them because of recent catalysts, good technical patterns forming. And I got one more for you. Last one, HIMS. Now, HIMS, similar situation here. 13% short. Again, how many days to cover that is? Don't know. Let's see if I can calculate that real quick. 20 over here. Also about 7-8 days to cover, maybe. 7-8 days to cover on HIMS. And this one, by the way, had really good earnings. That's when it had the gap up. We covered it then, bounced off the 50 DMA, and now it's breaking out. Yesterday I had a breakout above the 20 DMA. This can maybe cause some shorts to start capitulating. So something to keep an eye on. And this is also a stock you might want to hold long-term. Do your research on it. But it seems like a solid company with really good earnings last time. All right, we're continuing monitor MSauce for potential news coming tomorrow out of the event that Chuck Schumer speaking at in Washington, D.C. SMSI failed to break out yesterday. This is on our watch list. Is that this was a really key level, 130. If you break 130, 150. Didn't happen yesterday. We'll see if it happens today. ASUR Russell 2000 play has been exploding. 16 to 18 was always my target on this. We're right in that range right now. I already sold some. Still looking to sell a little bit more. DermTech has been breaking out a little bit. They have earnings coming up. Talk has been breaking out. All right, that's about it that we can cover today. So we'll see you at 10:30 a.m. this morning. We'll talk about Quip and Mobileye with Chris Tuttle Trades, and who knows, maybe something else by then too. Maybe we'll talk a little CJJD. Thank you for joining us, folks. We'll see you today at 10:30 a.m. Then again today at 4:30 p.m. for the CEO of RELL interview. Have a great day, guys. Thanks for joining me.